Most people want to start investing, but they all get stuck on one question. Where should I actually put my money? Should you invest in stocks, real estate, crypto, or just leave your money in the bank? With so many options, it's easy to feel overwhelmed. And because of that confusion, most people end up doing nothing. They wait. They keep their money sitting in a savings account, losing value over time. Or even worse, they jump into something they don't understand and lose money. Here's the truth. Choosing where to invest doesn't have to be complicated. But if you don't understand the basics, it can cost you a lot of time and money. Because not all investments are the same. Some are safer, some are riskier, and some are simply not meant for beginners. In this video, I'm going to show you exactly where beginners should invest their money step by step, simple, clear, and easy to follow, so you can stop guessing and start investing with confidence. Let's start with the most important thing you need to understand before choosing any investment. Before you decide where to invest, you need to understand something important. There is no perfect investment. Every option has its pros and its risks. And as a beginner, your goal is not to chase the highest returns. Your goal is to choose something simple, something proven, and something you actually understand. Let's break down the 3 most common investment options. First, stocks. When you invest in stocks, you are buying a small piece of a company. Over time, as that company grows, your investment can grow with it. Stocks have historically been one of the best ways to build wealth long-term, but they also go up and down in the short term, which is why they require patience. Second, real estate. This involves investing in properties, either to rent them out or sell them later at a higher price. Real estate can generate income and grow in value, but it usually requires more money to get started, and it's less flexible than other investments. Third, high-risk options like crypto. These can grow very fast, but they can also drop just as quickly. And for beginners, this is where many people make mistakes. They chase quick profits instead of building long-term wealth. So instead of asking, which investment can make me rich fast, ask yourself, which investment can I stick with for years? Because consistency beats hype every time. Now that you understand the main options, let's talk about the best place beginners should actually start. So, where should beginners actually invest their money? If you want a simple, proven approach, the best place to start is the stock market. More specifically, low-cost index funds. Instead of trying to pick individual stocks or guessing which company will grow the most, index funds allow you to invest in many companies at once. This means you're not relying on one company to succeed. You're investing in the overall market. For example, instead of picking one stock, you could invest in a fund that tracks hundreds of top companies. Over time, as the market grows, your investment grows with it. This approach is powerful for 3 reasons. First, it's simple. You don't need to spend hours researching stocks. Second, it reduces risk because your money is spread across many companies. And third, it's proven. Many long-term investors use this strategy to build wealth steadily over time. This doesn't mean other investments are bad. Real estate and even higher risk options can have their place later. But as a beginner, starting simple gives you the highest chance of success. Because the biggest mistake is not choosing the wrong investment, it's choosing something too complicated and quitting. Now that you know where to start, let's talk about how to actually begin step by step. Now that you know where to invest, let's make this simple and actionable. Here's how to get started step by step. Step 1. Choose a platform to invest. You need an app or broker that allows you to buy investments. Look for something that is easy to use, has low fees, and is beginner-friendly. The goal is not to find the perfect platform, it's to choose one and get started. Step 2. Open your account. This usually takes just a few minutes. You'll add your personal information, connect your bank account, and get everything set up. Don't overthink this part. It's simpler than most people expect. Step 3. Pick an index fund. Instead of choosing individual stocks, look for a fund that tracks the overall market. This gives you instant diversification. You're not betting on one company, you're investing in many at once. Step 4. Start with a small amount. You don't need a lot of money to begin. Even $50 or $100 is enough to get started. Remember, this is about building the habit, not being perfect. Step 5. Invest consistently. Set a monthly amount and stick to it. This is where real growth happens, not from timing the market, but from staying in the market. Over time, your investments begin to compound, and that's when things start to get interesting. But there's one more thing you need to understand if you want to avoid the biggest mistake beginners make. At the end of the day, the best investment is not the one with the highest returns. It's the one you can stay consistent with. Because investing is not about getting rich quickly. It's about building wealth slowly and letting time do the work for you. Most beginners fail not because they chose the wrong investment, but because they never stay consistent long enough to see results. They jump from one strategy to another. They chase trends. They try to time the market. And in the process, they lose focus. But now you know a different approach. Start simple, stick to the basics, and stay consistent. Because when you invest regularly, month after month, year after year, your money starts working for you. And over time, those small investments can turn into something powerful. So don't wait, don't overcomplicate it, and don't let confusion stop you from starting. Take action, start small, and build from there. If you found this helpful, make sure to watch my video on how much you should invest every month. It will help you create a clear plan and stay consistent with your investments.